First of all is the introduction of Celcomdigi. Established in 1988 and 1995 respectively, Celcom operated as a premier subsidiary of Axiata Group, while Digi was backed by the Global Telenor Group, both serving as dominant market leaders. Now, let's go through the Celcomdigi merger timeline. Formal talks began in April 2021, leading to a binding agreement that June. After clearing intense MCMC antitrust hurdles in June 2022 and securing overwhelming shareholder approval at dual EGMs that November, the deal officially closed on November 13, 2022, legally renaming the entity to Celcomdigi Berhad in early 2023. As for the background, this transaction was a brilliant local pivot after a massive 9-country Asian merger failed in 2019 due to regulatory complexities, valued at Rm 49 billion, making it the largest digital deal in Malaysian history. Digi issued 3.95 billion new shares to acquire Celcom. This created a balance at 30.1% equal joint venture, strategically structured to maintain a 51% local majority ownership block.
This transaction is a horizontal merger because Celcom and Digi, operating in the same telecommunication industry and offering similar products and services such as mobile voice, mobile data, prepaid and postpaid plans. Before the merger, they were a direct competitor. After the merger, they formed Celcomdigi, becoming Malaysia's largest mobile service provider with a stronger base and a better operational efficiency. The merger was driven by 4 strategic objectives: achieving cost efficiency by eliminating duplicated infrastructure and lowering operating costs, creating a stronger market leader by combining the strengths of both companies and expanding the customer base, improving network coverage and service quality through integrated 4G and 5G infrastructure, and accelerating digital innovation by investing in new technology and supporting Malaysia's digital economy.
To evaluate their immediate financial impact, we analyzed their baseline metric from the 2021 pre-merger report against the 2022 post-merger audited statement.
So moving on to the liquidity and leverage analysis. For liquidity, both current ratio and quick ratio remain below 1.0. However, this is actually common for the telecom companies because they generate stable cash flow. The post-merger liquidity of 0.48 show that Celcomdigi is managing its working capital efficiently.
Looking at profitability, the immediate post-merger results show a slight expected drop. Net profit margin moved from 80.3% for Digi and 14.6% for Celcom, down to 9.3% for the combined entity in 2022. Similarly, return on equity dropped to 184%. However, Celcomdigi maintained a remarkably strong EBITDA margin of 47%. This indicates the solid core operational performance remained intact, and the minor profitability declines are merely short-term integrates friction before full synergy kicks.
For leverage, the merger creates a stronger capital structure. Before the merger, Celcom had a very high debt-to-equity ratio around 1.462%, indicating high reliance on debt. After the merger, it reduced to 1 to 2.15%, showing a lower financial risk and more balanced structure. Overall, the merger was a successful and as it improved financial stability and creates stronger shareholder value. We recommend Celcomdigi to continue optimize its network operation to achieve the expected